all want to make money, but इतना time and expertise किसके पास है? इसीलिए तो आजकल passive investing बहुत सारे investors को काफी attract कर रहा है. You too can start investing passively through index funds and ETFs. They both aim to replicate and not beat the overall market returns. पर लोगों को फिर भी confusion ये रहती है कि difference क्या है और इन दोनों में better investment option क्या होंगे? Well, your doubts stop here in this episode. Hi, I'm Sumita Karir, back with more details on passive funds for your investments. In our previous episode, you learned about the key difference between active and passive funds, the concept of maintaining consistency throughout the different market cycles within SIP. And now that we've started this journey and entered the world of passive investment, let's go places. Watch till the end of this video to get a quick checklist to get started. ETFs and index funds, what do investors feel about them? Key advantages, stats, performances, and risk, who is it for? And checklist before investing. Well, how to start a passive way of investing? If you aren't familiar with passive investing, like we said earlier, it's a long-term type of investment strategy that aims to match the market and not beat it. How should you get started on it? The answer is by investing in ETFs and index funds. थोड़े complicated words है ना, लेकिन इनमें investing उतनी ही easy है. Being important types of passive funds, both ETFs and index funds invest in an entire market index like Nifty, Sensex, etc. instead of investing in an individual stock. समझ लो कि वो same है, but different भी है. How are they the same? Both aim to match the returns of the market index, both offer portfolio diversification, both promise strong compounding in the long term, both allow you to redeem your investment at any time you want. And now, how are they different? Well, index funds are priced only at the end of the day, like any mutual fund. On the other hand, ETFs can be traded throughout the day like stocks at any value. An index fund can be bought via DMAT and not DMAT sources, whereas ETFs can be bought only via a DMAT account. Index funds have a comparatively higher expense ratio, whereas ETFs have a lower expense ratio. An expense ratio is the cost that is incurred while managing active funds, costs for research, analysis, management, and so on. ETFs are bought in units. So if 1 unit of an ETF is 40 rupees, you have to invest an amount in multiples of 40. Index funds, on the other hand, are generally bought in terms of an amount. So if you invest 500 rupees, you'll get units worth 500 rupees. समझे? बोला था simple है. तो अब हम आपसे कुछ questions तो पूछ सकते हैं, right? Are you aware of ETFs or index funds?
Yes, I am.
Yes, of course.
Not much. I know a little about it.
Do you invest in either of them?
No, I don't.
Yeah, I do.
What made you invest in ETFs?
Actually, they're safer because they represent the whole market, so it's better that way.
कहते हैं टाइम इज मनी और ETFs और इंडेक्स फंड्स में इन्वेस्ट करके आप दोनों बचा सकते हैं. Also, with the ETFs being traded on the exchange throughout the day, you can cash in on the changing market opportunity in real time, in no time. Plus, since they're managed passively, so instead of tracking the market every minute, you can spend your time doing things that you love to do. The best part is that you get the advantage of diversification. For example, let's say you invest in 1 unit of an index of Nifty 50, which is the top 50 companies listed on Nifty. Now, you have invested in not only the top 50 companies, but also those 50 companies are from many different sectors like IT, pharma, banking, etc. अब जब किसी चीज के इतने फायदे हो तो लोग इंटरेस्ट लेंगे ही ना. As of June 2022, index fund folios stand at 27 lakhs and ETF folios stand at 1.2 crores. Both of them have grown by more than 100% since June 2021. And guess what? The overall mutual fund folios for the entire industry has increased by only about 35% in the last 1 year. Amazing, right? Passive funds तो celebrities की तरह popular बनते जा रहे हैं. बट कहते हैं ना कि दोनों हाथों में लड्डू नहीं मिलते. In short, there are always some possible risks with rewards as well. Since an ETF is traded on the exchange, it comes with possible challenges like not finding enough buyers when you want to sell or not finding enough sellers when you want to buy, getting affected by the market or index falls. ETFs have tracking error, which is the difference between the return of the underlying index tracked by the fund and the actual return generated by the fund. अब ऐसा क्यों होता है? क्योंकि funds may attract certain expenses that the index does not face. जैसे कि in the case of ETFs, there's a cost of brokerage involved because you trade it on the exchange like any stock. So these kinds of factors also lead to tracking error. And not just this, other key factors for tracking error can be: number one, expense ratio. The expense ratio of these funds are deducted before the returns are credited to the investor, causing a very minor difference between the ETF returns and those of the benchmark. Number two, any delay in purchase or sale of shares due to poor market liquidity, settlement or realization of sales proceeds. And now let's come to the third point, rounding off differences. Well, while mimicking an ETF's portfolio with its benchmark index, there could be some rounding off done with respect to the number of shares, affecting the total value of the ETFs and resulting in minimal tracking error. इक्कीस दिन में पैसा डबल. If you're looking for such quick and unexpected returns, तब तो ये आपके लिए बिल्कुल नहीं है. ETF and index fund investments are for you if you're seeking long-term investment, portfolio diversification, and to make money in the market without active involvement. So, do we have it right? Is this what you're looking for? चलिए आपसे ही पूछ लेते हैं. Are you looking to invest in the long term or short term?
I prefer long-term investment.
Preferably long term.
I usually invest in long-term investments.
How often do you track market ups and downs?
Probably within 2 weeks or so.
Since I invest in long term, I don't track them very often.
Have you ever fallen for 21 दिन में पैसा double kind of gimmicks?
Never.
Not so far.
No, not actually.
Okay, I just don't want to talk about that. Can we skip this question?
अब जब आपने इतनी ऑनेस्टी से सारे आंसर्स दे दिए हैं तो हमारा भी फर्ज बनता है कि आपको आगे बढ़ने का सही रास्ता बताएं. If you find index funds and ETFs as good options for wealth creation, here's a checklist for you to know how to choose one. Create a demat account. You need a demat account to get started with ETFs. You do not need a demat account for investing in index funds. Check your risk appetite. Don't just look for returns. If you aren't prone to risks, look for a fund with a history of stability in the market downturn. Choose your index. Be clear if you want to grow with an index of big companies like the Nifty 50 or if you want to benefit from a specific sector like IT or pharma. Keep an eye on the expense ratio. The expense ratio is equivalent to the cost that you as an investor pay for the fund. So when you shortlist funds for investment, check this ratio and compare it with the funds having the same benchmark. Check risk-adjusted returns. Ensure to check funds with low tracking error for ETFs and consistent returns for index funds. Set your time horizon. Remember, when investing in ETFs and index funds, the longer the period, the better the return. I hope now you know enough about index funds and ETFs, which are popular ways of investing in passive funds. We will now stop to rest and refuel. Subscribe to Mutual Fund at Groww channel to check the next episode. If you like this content, do like this video and share it with your friends. Goodbye and thank you very much for watching.